Good morning and welcome to our Ashworth Wealth Weekly Market Update. We're grateful that you're with us. My name is Scott Thomas. It's good to be back. Haven't done it for a few weeks. I wanted to follow up on a couple of things that we've covered over the last probably month or so. One has been the Fed and what the Fed's doing with interest rates. It looks like as of right now, the Fed's next meeting is scheduled for September 19th and 20th. There is some speculation there might be one more rate hike, trying to get the inflation rate down to 2%. Others think that that probably won't happen. And depending on how things look over the next couple of months, we may be done with rate hikes and we may actually be looking at rate uh, um, cuts sometime next year. So we're anxious to see where that goes and where we're headed on that. Another one that Todd talked about last week, another indicator that we watch is new home starts. What's going on? Do people have confidence in the market? Are they buying new homes? Are they starting new homes? And if they are, for every new home that's built, that bleeds into lots of other industries. So that's another one that we watch really closely. One that I wanted to talk about a little bit more today is the PMI index. The PMI index, that stands for Purchasing Managers Index. That's an index that really tracks manufacturing and the service sector. It's been very interesting to watch the PMI over the last year or two. And PMI, the PMI index is actually down 5.2% from last year. However, I'm going to go to the slide here. However, it's really interesting to look at. If you look at the purple line up above, that is equipment sales. That is usually a good indicator of where the economy is going and how people feel about the economy and whether they're spending money on equipment. That is down, compared to last year. Also, the structures, which is the light blue line in the middle, that one's kind of been bouncing around as well. But the one that really is interesting to us is the intellectual property products. That is really being driven by AI and the AI technology, and that has really buoyed up this whole index. So even though the durable goods and building, structures are down by 5.2%, the index as a whole is actually pretty flat. What that tells us is even though a couple of these are down, there still is quite a bit of momentum in the economy. And so we're going to continue to watch this very closely. One thing that we have found, and Todd mentioned this last week, is with the PMI index, with interest rates the way they are, new housing starts, it appears as of right now that we have avoided going into some kind of a recession. There was a lot of speculation earlier in the year that we would be hitting some kind of a recession. Doesn't mean that we still can't, doesn't mean that we won't in 2024. But the economy has actually remained stronger than what many people thought earlier in the year, and that bodes well for the markets. So again, I hope this helps. Again, it's just another one of the indicators that we watch as we are looking at the markets and as we're going up and down and getting reports each month and each quarter on the different indicators. And we'll continue to bring these to you, and hopefully it gives you some insight into what's really going on with the economy and where we think portfolios are going in the future. Again, we're grateful that you're with us. We're glad that you tune in each week to watch these, and please let us know if you have any questions. Thank you.